Good afternoon to everyone, and welcome to the Engage for ESG webinar in terms of ESG reporting. Today, 24th of June, we have quite a busy agenda, but we will allow now for a couple of minutes before getting started. Perfect. So, good afternoon to everyone. My name is Marco Angeben, Head Business Development and Regulatory Affairs at European Data Warehouse. And today, I'm delighted to look into the Engage webinar. Particularly, we have an agenda together with Ana Martinez Piña. She's a partner at Banking and Finance and the head of Financial Regulatory and Insurance at Gomez Assemble Pombo. And then we have the colleagues from Hyperport, Vincent Marier and Jais, where we're going to look into the latest regulatory developments as well as the development of the portal. So in terms of the agenda, we look at the simplification of the ESG regulatory framework, then the initiative news in terms of the white paper for the roadmap of sustainable finance requirements, and the DG FISMA sustainable update, and most also relevant for us is a part which is relative to the new proposed revision of the securitization regulation. The documentation was released actually last week. Then we'll, together with Jais, we'll go and look into the Engage, what are the latest news, and then the how to become a trial user, and then the next events that we have for the last part of the initiative. So, in terms of the Engage for ESG initiative, as you can see here, we are towards, let's say, the end of the project, which started in November 2022. It consists of 6 consortium partners and is really aimed at providing a simple solution for ESG reporting relative to mortgages, and I should say actually residential mortgages and home renovation loans in terms of being able to align with the EU taxonomy and being in compliance with both the energy performance of building directive as well as the general data protection regulation. So why the Engage for ESG? Well, because there are quite a few requirements in terms of physical risk, green asset ratio calculation, and transitional risks that needs to be clearly managed. And so the mandate from the Commission was really to try to have a very specific and harmonized way of reporting in a centralized manner through the first Engage templates and then the Engage portals. So, at high levels, as you see here, the main objective is to be in compliance with the GDPR, with the taxonomy, and the APBD. And the initiative is in part of the initiative. There are 2 dedicated pilots, one from the Netherlands, and then Bank, and the other one UCI, that has portfolios both in Spain and Portugal. But the 2 key pillars are the templates as well as the portal, which is the infrastructure that helps to collect all the information in private areas for the benefits of borrowers, which might be able to get better borrowing conditions for their loans or mortgages, and also for the investors because they have then the access to the information in a standardized and homogeneous manner. In terms of the templates, the structure is really based on the ESMA templates, in particular the two annexes, Annex 2 and Annex 6. And then we have been building on top of it two specific sections, one for the acquisitions of new buildings and existing buildings, as well as for the renovation of the existing buildings. And last but not least, also we have looked into the European Investment Bank information requirements, like, for example, the green eligibility checker, in order to capture the European funds from green financing programs. This is for the renovation wave. And most importantly, also, we have now been able to register also the engaged templates with the Spanish Intellectual Property Register in terms of recognizing the originality of the templates themselves for the dissemination and the use by different parties. Most recently also, we are delighted to announce that now we have an expert group with representatives from European Investment Bank, Banque de France, and Banco de España. And the aim of this expert group is really to focus on the optimization of the templates and the portal, and to make sure that there is a straightforward implementation of the taxonomy from different parties. Okay, now over to you, Anna, in terms of the simplification of the ESG reporting regulatory framework.
Hello, Marco. Thanks a lot. Hello to everybody. First of all, I would like to thank you, European Data Warehouse, for inviting us to participate in this webinar. As you said, we're going to talk about simplification of the regulatory framework, especially the simplification that has taken place through the Omnibus package. If you could move to the next slide. Yes. So mainly, I will start with an introduction about why the European Commission has started with this simplification process. Then we'll see what is Omnibus, as Omnibus includes different packs of legislation. Then we will focus in Omnibus 1, which is the one related to the simplification of ESG regulation, basically about corporate reporting, due diligence, and carbon offsetting. And then we'll see some reactions to this Omnibus 1, especially by the European Central Bank and member states. And finally, just a few reflections. So about why this Omnibus package is in place. As you know, there was a new European legislature started after summer 2024, and one of its objectives was to strengthen competitiveness. Before the European legislature started, some reports were published, in particular the letter report and the Draghi report. They both, especially the Draghi report, pointed out that European companies were losing competitiveness in comparison with companies, for instance, from the United States and other jurisdictions. So both the Draghi report and the letter report said that in order to foster competitiveness, there was a need to foster innovation, a need to continue with the decarbonization agenda, and also a need to strengthen economic security. So to foster and strengthen competitiveness, different measures were included in the reports. And among those measures, one of them was the need to reduce bureaucratic burden and simplify regulations. So from that point of start, omnibus package was published. As I said, it's a set of legislative packages aimed at simplifying regulations to boost competitiveness, and until now, 4 packages have been published. The first one is Omnibus 1. As I mentioned, and the objective is to simplify regulation on corporate reporting, due diligence, and the carbon mechanism. A second package was published, Omnibus 2, and that it focused on investments. The objective of Omnibus 1 is to propose certain modifications to simplify and optimize the use of various investment programs, such as the Invest EU, the European Fund for Strategic Investments, the Connecting Europe Facility, and Horizon Europe. So this second package was focused on investment. And there was a third and fourth package that focused on the need of SMEs, European SMEs, to grow. And in this respect, there was a proposal to introduce a new category of small and mid caps and to adjust the regulation in order to boost incentives for SMEs to scale up, to digitalize, and to reduce the red tape, and also to support the Commission's goal to cut administrative costs by 25% overall and by 35% for SMEs by the end of this Commission mandate that started in 2024. So this is basically the Omnibus package. Now, as I said, we will focus in Omnibus 1 that mainly addresses ESG regulatory aspects. So Omnibus 1 is based in, or proposes the amendment of 3 pieces of regulation: directive as regards sustainability reporting by companies, the directive on due diligence, and also a delegated act on taxonomy. So if we start by the directive as regards sustainability reporting by companies, this directive addresses mainly large undertakings, and most of the banking sector is included in the scope of the directive, as most of the banks are considered large undertakings. The proposal of an amendment also has 2 parts. One part is what we call, or it's known by, Stop the Clock, and the other part modifies the scope and the content of the directive. The first part, Stop the Clock, as you know, mainly the directive has started to be applied to large companies with more than 500 employees, and the proposal of amendment is to apply the directive only to big companies that have more than, no, sorry, this first Stop the Clock is proposing to postpone the application of the directive to companies that have large companies that have less than 500 employees to 2027, and to listed SMEs to 2028. This amendment has already been approved, and this part of the directive is already published in the official journal, so European Union official journal. So the postponement of the application of the directive is already in place and is published in the official journal. The second part of the modification is the one that it has not been approved yet, and mainly has 2 main objectives. One is the scope of the entities that will have to apply the directive, and the other one is the content or the detail of the information that will have to be published by large undertakings. So the scope, as you know, now the directive applies to large companies, and the objective is that this directive applies to large companies with more than 1,000 employees. So this is a big change. If this proposal is finally approved, this will imply that the scope of the directive will be reduced in approximately 80% of the companies. So this is a big change. Large companies that have more than 1,000 employees. And then we have other modifications that, as I said before, simplify the information that will be provided by companies. First, for the remaining companies, the one that have less than 1,000 employees, and the Commission is expected to adopt a delegated regulation with standards for voluntary use. So companies with less than 1,000 employees will be able, on voluntary basis, to present this information according to a standard that will be published by the Commission and will be a standard more simple, with more simplified information. Second, also there is a modification of the value chain cap. So companies with no more than 1,000 employees may not be required to provide more information than that which will be included in the voluntary standards to be approved by the Commission. Also, sustainability reports will be reviewed by a verifier through a limited assurance report rather than a reasonable assurance report, as it is included now in the directive that was approved in 2022. Also, there's a modification, a proposal to modify taxonomy aspects, and in this regard, the sustainability report included in the directive should also include indicators foreseen in Article 1 of the taxonomy regulation to see to what extent the company's assets are aligned with taxonomy, GAR, etc. Less information to report less information will be reported by large companies with more than 1,000 employees and less than 450 million turnover. If they declare that their activities are associated with activities that comply with the taxonomy, less information will be asked to this kind of or to this size of companies, more than 1,000 employees, but less than 4,050 million of turnover. And finally, also the proposal establishes that the need to simplify ESRSs, the standards according to the standards that companies have to apply in order to report sustainability aspects, and no sectorial standards will be approved. The second directive that modifies this second proposal is the Corporate Sustainability Due Diligence Directive. As you know, this directive was approved in 2024, and well, the proposal modifies the following aspects. First one is that it limits the scope of obligations to level 1 direct trading partners. So the concept of a chain of activities is simplified. Second, due diligence monitoring obligation will be every 5 years instead of 12 months, is included now in the due diligence directive. Third, there's a reduction of burdens and effects for SMEs, limiting the amount of information that can be requested as part of the value chain or chain of activities. Also, the proposal reduces fines and eliminates the European civil liability regime, which is now at the level of the member states. There's also a proposal to postpone the transposition of the directive by 1 year. And finally, regarding the taxonomy, the proposal limits reporting obligations to large companies in the scope of CS3D. So these are mainly the proposals to simplify CS3D that, as I said, was approved in 2024. And finally, there's also a proposal to modify the delegated act on taxonomy, and mainly it proposes to simplify the rules for companies that remain within its scope and to limit the obligations for 90% of importers, mostly SMEs, which would result in a large savings, even if 99% of the emissions are covered. So mainly these are the simplifications on ESG that are included in Omnibus 1. So this was a proposal from the Commission that now is being analyzed by the Council and by the Parliament. Certain reactions have been already published. An important first reaction was the reaction of the communication launched by the European Central Bank that published an opinion on May 8, 2025. And the European Central Bank said that he would prefer to maintain broad company coverage and to include in the scope of the Reporting Sustainability Directive companies that large companies that have more than 500 employees instead of 1,000 employees, and it is included in the proposal of the Commission. Also, the European Central Bank was a little bit skeptical about relying on voluntary reporting under this standard that in theory the Commission would publish for voluntary reporting, because, well, the European Central Bank thinks that this voluntary reporting will not be followed by many SMEs, and maybe the information that is presented by the SMEs that effectively present this information is not comparable. And finally, the European Central Bank has considered that it's key to retain certain information that is now included in ESR and the ESRSs, in particular information related to climate that is included in ESRS E1 and biodiversity that is included in ESRS E4. To sum up, the European Central Bank would prefer that the scope of the directive is not enlarged or is not reduced as the Commission would like to, so that banks have access to more data, as banks are the ones who canalize flows towards finance and investments that have to comply with certain requirements that are included in the European Green Deal. So for the European Central Bank, it would be key to not to reduce the in the way the Commission proposed the scope of the directive. And what have been the reaction of member states? Well, the reactions have been different depending on the member states. In Italy and Spain, in Spain, they are advocating for the introduction of an intermediary category of companies that would be in the scope of the directive on mandatory basis, but maybe with a more simplified information. Other member states, as Germany, France, the Czech Republic, and Luxembourg, are proposing to raise thresholds even higher than the ones proposed by the European Commission. But in general terms, most of member states would support the proposal of the Commission as it is now drafted and being analyzed by the European Parliament and the European Council, even if they have slight differences. And finally, final reflections on this proposal. First, the European Union makes it clear that even if there's a need to simplify regulation to foster competitiveness of European companies, the objectives of the European Green Act remain. So there's not the objectives that were approved these years still remain. Second, the simplification, well, we think it's always welcome to simplify obligations for companies, especially reporting obligation. will effectively foster competitiveness. A voluntary simplified framework can be positive, especially for SMEs that are not obliged right now to present corporate sustainability information. This might help them to do it on voluntary basis on a more simplified way. Also, a couple of more reflections. This simplification has been launched by the Commission, but also European supervisors and national supervisors are moving towards the need to simplify not only level 1 regulation, but also level 2 and level 3 regulation, and also supervision. So the three S's, the European Banking Authority, ESMA, and EIOPA, are planning and are taking measures to simplify level 2, level 3, and supervision of the financial sector. And also to finalize, there's a move to simplify not only obligations of companies, but also the access of investors, and in particular retail investors, to markets. So there's a review of different pieces of regulation, for example, MiFID, that in order to facilitate the access of retail investors to financial markets. So mainly these are the simplification of ESG regulations we are now dealing with. Thanks a lot.
Thanks a lot, Anna. Very thorough review of the latest news. So, in terms of the Engage initiative, I think what is important here to stress is that we have now also published a white paper. This is now focusing on the roadmap for sustainable finance, and it looks at the anticipated the complexity actually and the changes that in terms of reporting that are foreseen for 2025. And we are particularly looking at the taxonomy and the PBD4. And we are also sharing some learnings in terms of the what we have learned actually from the two pilots in terms of using the Engage templates. So if you really want to read more, you have here the link. I should have said that at the very beginning also that this presentation will be made available also on the Engage website, so you will have access to the whole information. But over to you now, Vincent, in terms of the general FISMA sustainability update.
Thank you, Marco. I think as a follow-up on the previous presentation, I think in the sustainable finance media, LinkedIn, etc., a lot of attention has been paid towards the omnibus package. But I would say that 99% of the omnibus package 1 and 2, related to the CSRD and the CSDDD. There was really a really tiny section on EU taxonomy updates there, but that was more a little bit on one particular do no significant harm criteria and some updates with respect to the disclosure requirements. So that was, I think, always a little bit of a surprise that so little was published on the taxonomy in February of this year. Specifically, if we look into the regulations, so specifically the level 1 and 2 regulation of the taxonomy, the climate delegated act states that in 2025, so 3 years after it was published, the criteria needed to be reviewed. The beginning of this year, we have seen that this was the ending of the second mandate of the Platform on Sustainable Finance. And we've seen a very productive platform on sustainable finance. They published 8 reports. 3 of them were on the EU taxonomy specifically. We've highlighted those we gave an overview of those reports and what is in those reports related to residential mortgage loans in the white paper that Marco just mentioned on the previous slide. And I think we gave a very good overview also of the different directions the different platform reports have taken. One of them in particular was with respect to simplification. And it was very much welcomed what was in that report. However, the last report that they published on the 1st of April, yeah, that was quite the opposite of simplification. And in that sense, one could say somewhat tone deaf in terms of the proposals that were made. It only covered substantial contribution criteria, so no minimum safeguards, no do no significant harm criteria, and only refer to three economic activities, 7.1, 7.2, and 7.7, based very much on feedback that was provided back in 2023. That's almost outdated in this fast-pacing sustainable finance world. So I think that sheds a little bit of the background there. And actually, this had quite some of us worried, because we were promised that this year the taxonomy would also be updated. It remained very silent from Brussels with the omnibus package and afterwards. No message from DG FISMA, no message from the Platform Sustainable Finance, even though their mandate ended on the 31st of March. So after quite some time of waiting, a lot of emails, a lot of asking around, we were happy that we had a little bit of light at the end of the tunnel when we received the newsletter of DG FISMA on the 21st of May. So finally, we now have something in writing from the Commission, whereby they state that they have the update of the EU taxonomy on the radar. I think this is very, very important, especially for our scope, mortgage and residential loans. So the Commission states that the EU taxonomy screening criteria, including the do no significant harm criteria, with the objective of updating, simplifying, and enhancing their usability, will be performed. So I think this is very, very helpful. And I'm also glad that they used the word simplifying, because that, I think, reminds us of the platform report on simplification of the EU taxonomy, which was very much welcomed across Europe. In terms of timescale, we're looking at what the Commission has stated, a timescale of early 2026 to be adopted. So Q1 and Q2 of the coming year. So probably we'll see a consultation in the first quarter, and hopefully the delegated acts will be adopted in the second quarter. And I think it's already interesting that they note that the changes would then apply as of the reporting year 2027 for the financial year 2026, or possibly, if desired by companies, already for 2026. So that's, I think, a very, very interesting remark and highly relevant for everyone in this call. I think it's interesting for a couple of reasons. Firstly, around the end of the second quarter in 2026, we also have the deadline that the Energy Performance of Buildings Directive 4 needs to be a transposition in national regulations across Europe. So these timelines will now align. I think that's might be a coincidence, but that's, I think, an interesting one. Last month, ING published a report on the green asset ratio in Europe, and they investigated the financial reports of the financial institutions in the EU, and we have seen that the average green asset ratio is 3.7%. So this is very low. And of this 3.7% on average, this mainly is comprised by residential mortgages. In quite some countries, the only taxonomy aligned assets that can be reported are residential mortgages. So there's really a lot to win here into updating the taxonomy so that is better, users are better able to apply the EU taxonomy. So I think this is really relevant. Yeah, and we are really closely following these developments, trying also to provide our feedback to the Commission, explain them what works, what doesn't work, and what can be improved upon. Because I think we have a very interesting insight from a data perspective. And yeah, just to give an example, I think we have a lot of ground to win if we can make, for instance, renovations or the do no significant harm criteria better applicable. Because ideally, we want to have really an uptick in the green asset ratio a much larger percentage across Europe than the 3.7%. So very interesting. Finally, we have some timelines, and that we will be following this very closely, and not in the least because this will also potentially has influence on our templates, our business rules going forward. Then lastly, a update is also provided on the SFDR. This will also be reviewed and updated in the last quarter of this year. It will be based again on relatively outdated input from 2023. I think this is also highly relevant. We've seen some interesting opinions this week, for instance, from EFME on the SFDR. But also, I think it was an interesting remark that the ECB has noted and the platform has noted that they wanted to align the SFDR and the EU taxonomy more closely. So also that would be highly relevant for us to follow in the last quarter of this year. Moreover, since there are also some KPIs in the SFDR on the reporting of energy efficient mortgages. So if we go to the next slide, we just briefly listed the summary that was actually in the newsletter. Well, I think based on the previous presentation already mentioned, the timelines of the omnibus package, so I won't repeat that. We expect Q1, Q2 in the coming year, the update on the EU taxonomy, and already later this year, an update on the SFTR. So we will definitely follow that and keep you updated. I give the word back to you, Marco, because there's some more news.
Yeah, thanks, Vincent. Indeed, there are some more news because last week, exactly last Tuesday, the European Commission has, let's say, published the package of the measures that are seeking to, let's say, improve the EU securitization regulation. This also on the backs of the Draghi and the later reports, plus a lot of consultations that have been done in the previous year. And so as part of this, let's say, package, clearly securitization is center stage, together with also the capital requirements regulation for securitizations. So I think a couple of remarks from this perspective, also given that the engaged templates are based and building also in terms of the building block number 0 from the 2 ESMA templates for resi mortgages and the consumer loans. So the fact of the matter that from a, let's say, reporting perspective, the main idea of the European Commission is really to simplify the reporting templates. Interestingly enough, the revision of the templates will be carried out from the European Banking Authority instead of of ESMA. With whom anyway the EBA will be still in close contact, and EBA will also be in charge of the joint committee that will oversee this whole simplification of the reporting. In terms of the recommendations, or in terms of the number of the required fields, the Commission is aiming of having a reduction of 35% where feasible. The other interesting thing is they are looking into reintroducing mandatory and optional fields, and they are also looking into they are not looking into introducing new, let's say, data fields for green securitization, but they are actually looking at the more referring to the existing voluntary EU green bond standards. So, but if you want to read more, again, there is a link here to the references to the let's say to the whole package. In terms of then the next. One second, that we have our presentation blocked. Yeah, it's okay. Go back. Okay, now we have established the line. Sorry for the technical glitch. So now, so over to Jais in terms of the Engage portal.
Yes, thank you, Marco. Next slide, please. A little a refresher on the Engage portal and what we've been working on the front side of things. A little summary, also talked about in previous webinars, but I don't think a refresher is a bad thing. Engage portal will allow you to upload and assess the alignment of your loan portfolio with the EU taxonomy, where we have detailed loan and collateral level checks based, of course, on the ESMA tapes and with an extension that you can use, which can be found on our website. The most important thing, in my opinion, is the output. So can you do the next slide, please? Because there's two types of reports that you will get after the data has been checked by our check process. The first is the data quality report, where we give you a detailed overview of the rules and checks we have in place to see the relations between the various data points in the data set, with some extra explanation on also how your performance might be related to the EU taxonomy and some inconsistencies mainly. For example, a construction year that is flagged as 1900, the 1st of January, might be a default value that practically indicates that there is no construction year, or that there is another data issue with the set. Another small example, let's look at the bottom one. A building unit in top 15% indicator is equal to yes when the construction permit application date after 31 December 2020, with of course the 21 cutoff being a piece of logic that we've built in. Next slide, please. But the more interesting one, the one where it's all about, is the EU Taxonomy Alignment Report, where we give you a detailed overview per building block, per certain subcategories, what the score is of your portfolio in the number of building units, in value, in percentage of the total portfolio. I would say try it yourself, get onto the portal, upload your data, and see what the results are. And of course, if you do such a process and you have any questions about the checks, how they work, how to reconcile certain numbers, how to find the same conclusions as are shown in the EU Taxonomy Alignment Report, then please contact us so we can go over these numbers in a private call. Then upcoming features, yeah, we have ticked off the second one, the ability to upload draft files. So now we also can use the portal as a safe platform to make sure that working files or certain files you want to share with colleagues or investors that are not necessarily that are not needed to be checked by our portal can also be shared safely and with the same authorizations when it comes to viewing and uploading as are already in place on the portal. And the 1.2, sorry, is still in progress, as also more legislation and changes there are expected. A little screenshot of the Engage portal. I'm not going to demo it this time. I will keep for the sessions after the summer break. So I think I will give it back to Marco to tell you all about how to become a trial user via the portal.
Thanks a lot, Gis. Excellent. So in terms of what is happening next, as Jais was mentioning, we continue to enhance the portal, and we continue also to talk with different players in terms of becoming a trial user of the portal, which I should say actually gives you a specific private area where you can upload the data. You can test it as according to the Engage templates, and then get as the output these two reports. So in terms of clearly the benefits, you can use it for mortgage portfolios, for RMBS transactions. You can use also for cover bonds. It's in a user-friendly format, i.e. accepts also files like in Excel or CSV. And most importantly, it's also a kind of a European it's a kind, it responds at the an interpretation of the EU taxonomy, let's say at European level, which should also simplify the reporting to different institutional investors. In terms of the trial period, it's basically free from till for the next 1 year. We already had a lot of conversations with several institutions, more than 80 now. So these are becoming familiar first and foremost with the Engage templates. Then typically what happens is we have specific calls in terms of clarifying some of the aspects of the templates themselves. Then there is I would say actually a simplified standard legal agreement that has been put in place in terms of the possibility to submit into the private area the sample files of the Engage portal. And then you can, for each sample file, you will get the two reports that Gais was mentioning earlier. A data quality report first, and the most important, the EU taxonomy alignment report. Good. That takes me to the event section. So we have an event coming up in September after the summer break on the 24th at Scuola Grande di San Giovanni Evangelista. This is in Venice. We are gonna prepare some specific also user cases for this event. But stay tuned because the reality is we will be also able probably, I would say beginning of July, to register for the event that we be going through the Engage website. And also we have the next Engage webinar then is going to come up on the 30th of October. That's the last of the series. But I want to take this opportunity also to, first of all, to thanks Ana Martinez Piña, the partner from Gomez Acebo and Pombo, and the colleagues from the project, i.e. both Vincent and Jais for their clear explanations. And we remain at your disposal for any questions that you have in terms of the interpretation of the taxonomy for rising mortgages and for consumers loans. So that being said, thanks everyone for participating, and we look forward to continue working with you. Thank you, and have a great rest of the day.
Thank you.
Okay.